The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
Welcome to the Trade. Well, let's get across the charts. And Zoran Kresovic joining us from Blueberry Market. Zoran, good to catch up with you again. Lots to watch, of course, in the market at the moment. And let's first take a look at what we're seeing more broadly, I guess, on markets at the moment. Zoran, just checking you are, looks as though Zoran might be frozen. Zoran, are you there still?
Yes, certainly I am.
All right. We've got your audio, maybe your picture frozen, but we'll continue on then. All right, let's begin with currencies then. And the US dollar making a bit of a comeback, I guess, reflecting what we're seeing more broadly of investors perhaps buying back into that story of American exceptionalism in the wake of that deal done between the US and China.
Absolutely. That's driving all the headlines across the globe over the past, I would say probably since April, but in particular, actually, we're seeing that over the last couple of days when it was announced that both US and China officials have actually met in Switzerland, and somewhat reciprocal measures have been, or tariffs have been actually reduced for a period of 90 days, which is providing a bit of a risk on sentiment for the market in general. And we're seeing that quite heavily happening within equities, in particular S&P 500, NASDAQ tech sector, and also locally on ASX. But it's also providing quite a bit of bullish sentiment when looking at the US dollar. Now, that hasn't been the case over the past 24 hours, purely because on the basis that obviously CPI data that's came out of the US on monthly level, both on headline figures and core figures, has actually somewhat come slightly lower than what was initially anticipated. But nevertheless, this could only be a slight pullback before we might see a little bit more US dollar appreciation. So having a look at the chart here that I've actually presented, which is US dollar, Japanese yen, in particular, we're actually seeing that bit of the breather happening on the US dollar right now, even though despite the fact that it's broken a medium-term downtrend from January 10th highs. So the pair is actually finding a bit of a halt and, retracing around that 23.6 to 38% of the Fibonacci level, and created a slight pullback and a double bottom, which could, in hindsight, over the next few days, post-Jerome Powell's Fed speech on Thursday, which is happening tomorrow, give a little bit more clarity to the actual market. And perhaps maybe we might see a little bit more, US dollar consolidation, and perhaps maybe a little bit more upside if possible.
All right, so that's how currencies are playing out. Zoran, let's move now into commodities with a focus on oil. We know how that's been under pressure, particularly with the outlook for global demand, which has suffered given those tariffs. But now we have seen that move, particularly between the US and China. How is oil looking at this point?
Yeah, this is probably one of the most fascinating charts, Andrew, when I actually have a look at the greater picture in terms of global scale of things, but also narrowing it down on daily or weekly basis. So, looking at the greater picture in terms of the actual downside risk on crude oil from its peak back into March 2022, we can see that all key levels have been actually broken on crude oil. What I've done on this chart is in particular actually narrow down the most recent range, or the levels actually from the peak of 14th of January 2025. And despite the fact that obviously crude oil found quite a bit of support around $55 level and created potentially a double bottom, we've seen the most recent upside of 6 to 7 days straight, which is quite significant, and in total around 15% upside on crude oil. Now that's a punchy move. One would actually consider that we've bottomed out, and we're looking potentially to go and challenge that multi-year support level, which is going to provide a resistance right now around $65.50. And if we can break that level, then we might be getting back within the range. Now, fundamentally as well, this is going to play a big picture as well, because the US and China slash tariffs by 115%. That's obviously supporting the crude oil in terms of the actual demand. And the API weekly report that came out in terms of the crude oil stockpiles in the US indicated that on the weekend on May the 9th, the stockpiles have actually climbed to 4.28 million barrels. Now, that's in comparison to 4.49 million barrels, which was the week prior, or what was actually expected. So the market consensus estimated the stocks would drop around 2.4 million barrels. So basically, the demand seems to be actually there. It looks like the rhetoric or the macro picture has actually somewhat changed. And as long as we can actually see a long-term resolution in terms of the global growth, geopolitical risk reduced, and also the US-China, tariffs come to conclusion post 90 days, then I think the market is actually going to start pricing that in. And in that instance, we could potentially see crude oil continue to head higher towards that $70, $72 mark.
Okay, some key levels there to watch out for oil. Let's now move to gold, and Zoran, a lot of movement here. It was a very crowded trade. That has unwound, particularly in light of that trade announcement between the US and China, as we have seen investors move from the safe haven into risk assets. So what are you seeing on the chart here?
Absolutely. Providing the headlines on day-to-day basis and all-time highs and on weekly basis as well, gold is actually somewhat taking a stance of a pullback and sitting in the back row when it comes to the driving the market headlines at the moment. I mean, key tailwinds for me in terms of gold are obviously US tariffs, which to somewhat we've discussed just now has actually been prolonged, or some sort of conclusion has come into an effect. Obviously, the greater things that I'm also considering in this instance when looking gold is the equity market volatility. So the VIX has actually come to the record lows over the past few weeks, which is obviously driving the risk on sentiment, as I mentioned previously, and risk on rally in terms of the equities. That's never a good thing for gold in particular, and as a result, we're actually seeing a pullback on gold. Dollar is obviously gaining strength, as I mentioned previously, as well over the past few days. And as a result, that's obviously contrary, or it's got negative correlation with gold. I would actually assume and imagine that at this point in time, gold has reached an all-time high, and it's probably likely to hold around these levels. 3505 on that chart is actually provided a reversal pin at the top and also created a lower high at the $3,444 mark. Looking at the greater picture in terms of the most recent uptrend on the chart itself, I can actually see that the pair has actually somewhat created a major support level around that $3,200 right now. I think that's also coinciding with the upward range of Fibonacci level around that 50% right now. So it's got a nice little cluster in there. And, for gold to actually find support around these levels, it is actually good. But it could also prolong, and if the buyers can't get into the market, or the sellers are still dominating and breaking the major low, which is around that $3,225, then we could potentially see gold come back and retrace towards the uptrend line, which started back in December 2025. So we could still see another 3 to 5% pullback in gold, and maybe towards that 3,100 to 3,000 level.
All right, so potentially finding a base, but remaining above $3,000. Zoran, just quickly, there's some forecasts, particularly even this week, given how far it's fallen, saying that it could still head towards 5,000 later this year. Do you see that as attainable?
I mean, look, it's definitely something, Andrew, that I wouldn't, I would not take out of the equation. I can definitely say that. I think we live in an environment, in a world right now where there is so much geopolitical risk. There is, the GDP growth as well is being slashed around the world in terms of the actual countries, starting from the US, China, and the rest of the Western economies. On the back of that, we are also, looking for the interest rates to be, slashed and cut across the globe. So right now, we're seeing that in the US, the market is still, or Fed futures are actually pricing that we will still get another 52 basis point interest rate cut. So we're looking at potentially another two quarter basis, 0.25% interest rate cuts from the US as well. We're likely to follow that through here. We're seeing that in Europe as well. So, as we're seeing the interest rate cuts and, as we're seeing that, global economies diminishing in a sense, obviously, the growth is slowing down, the GDP is slowing down. We're also seeing the labor market stagnating. In some of the countries, we're also seeing, like Germany, the unemployment ticking up, and particularly in Europe as well. It's not a discount that gold is actually going to continue going up now. Whether it's going to reach that 5,000 level mark, that's probably a little bit too optimistic in a sense at the moment. But with everything that's going on, for example, in Pakistan, India, everything that's going on in the Middle East, and the more uncertainty we continue to see in the market, then it's only natural that investors, hedge fund managers, central banks across the globe will be accumulating and trying to manage and hedge their exposures in the market. But look, I would probably imagine that we are likely at some point later in the year to see gold continue to actually test that 3,500. My top range projection would be right now probably somewhere around 3,500 to 3,700. But again, I'm not discounting anything because the world we live in right now, anything is possible.
Indeed, it is. Zoran, thanks so much for joining us in Blueberry Markets. That is the faceless Zoran Kresovic from The Trade. Unfortunately, did have some vision issues there. Thanks for joining us for The Trade.
The Trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.